Welcome to the Federal. Our special guest to discuss this year's budget is none other than Finance Secretary Tuhin Kanta Pandey. Starting in 1987 from Orissa, he has served the state government, central government, United Nations, and comes with a rich bag of varied experience. In the Finance Ministry, he has handled the sensitive department of public assets, especially listing of LIC and disinvestment of Air India. Vanakkam, sir. The most important question on the minds of everybody in this special budget is the big bang income tax exemption. What kind of a multiplier effect do you expect from this tax exemption? Because some of the money in the hands of people will go to savings, some will go to investment, and some will be for consumption. So what are the assumptions and what is the likely impact?
Well, as you rightly put it, it could be the choice which you exercise when the money goes back to you. So therefore, the decision making which would have been taken by the government on this money is now transferred to the taxpayers, and they choose either of the three options that you noticed. So therefore, obviously a multiplier will be a mix of consumption and investment multiplier.
And what about the tax base, sir? Because we keep on saying every year that the tax base is narrow, and now there are more people coming out of the tax base. So it becomes even more narrower. What is the scope for expansion, and what are the assumptions behind this kind of income tax exemption which has never been seen in the past?
They remain in the tax base because they will have to file the returns in order to get rebate. Only 0 to 4 lakh category, which is a nil zero rate, they will be exempt for filing. However, they might also, in case we have some TDS refund, then the return will need to be filed. So return filing is, yes, it will remain. Tax payment, yes, there will be none for that category. However, we cannot actually use that argument to keep on saying that we keep on, loading the rates, and when they deserve, consideration of the government, given that there has been inflation, given that there is a need for them to do, and given that there are other considerations. Therefore, I don't think that that argument we should hold against them in order to give relief. When they grow in income and when more incomes come, obviously the tax base will also increase, and we have to work for it.
And of course, there is also this theory about inflation. Because inflation was going up, the Reserve Bank had to hike interest rates and hold them steady. And there is a lot of demand for reduction in interest rates. But at the same time, there is also worry that inflation should not come back. So in such circumstances, this additional booster dose, will it not lead to further spurt in inflation?
Not exactly, because inflation will be impacted if we have actually a deficit which increases. If we were to increase the fiscal deficit in order to give the boost on consumption, then there was a risk that it may end up in inflation. Because fiscal deficits is that we are actually controlling it. So inflationary, it is a non-inflationary budget in the sense that fiscal deficit is being brought under control in the manner in which Honorable Finance Minister had indicated. It was indicated it will be 4.9 this year, and we have been able to achieve it 4.8. It was also, the path said that we will be 4.5 next year. We are intending to now bring it to 4.4. So therefore, we are well within the path which was brought in. More importantly, if you really look at the capex, and in the statement I will encourage you to see two figures. One figure is 11.29 lakh crore, which relates to direct government capex. Then there is another one which is 4 lakh crore plus, where grants are given from the center for the purpose of investment in capex. For example, if something goes to rural roads, if something goes to drinking water supply, these are all capex programs. They are not revenue programs. But they will be, for accounting reasons, are given as revenue here, because the assets belong to the state governments or the local bodies. So if you put together, which is there in the budget itself, what we call effective capital expenditure, this is of the order of 15.48 lakh crore. That means roughly about 15.5 lakh crore. And what is the borrowing? Again, in the same statement you will find it's 15 point something, slightly more, 15.68, which means that almost all the borrowings that we are doing is going to capex. This is a very unprecedented situation where, as the economist would say, this is like a dream spending so far as or quality spending so far as deficit is concerned. We have a deficit, yes, but it is going into capital creation, which adds to growth.
So we have a situation of a stimulus without the risk of inflation. Another connected area is the value of the rupee. We have been seeing depreciation in the recent months. What kind of outlook do you have for the next financial year? Is the rupee likely to stabilize at current levels, or is it likely to appreciate as it happened in the past? What kind of a scenario do we see?
See, we are not in the fixed exchange rate system. We are in the floating exchange rate system, which means the exchange rates are determined on relative parity, which means that inflation differentials, but also the flows. When the flows undergo a change, it is a demand and supply of foreign exchange. When some of the flows, which like FPI flows, they are reversed, like they can move out, then obviously there is a pressure on the exchange rate. Something like this we are seeing it now. When there are some big changes in US policy, either now the tariff policy of the new Trump administration or the earlier the Fed Reserve's actions. In either of the two situations or any other situation, there is a possibility of funds going back to safe havens. They go back to United States because United States continues to be the biggest source of capital, and there is a flow out of the emerging markets into the back to US. In that case, obviously there will be a much greater demand of foreign exchange by them in order to exit, and there is a demand pressure as a result of which appreciation takes place. There is also an issue of a relative parity, inflation differentials between US and India, and to that extent certain level of depreciation takes place on account of inflation differential, what we call the real exchange rate. So one has to see whether the present exchange rate, nominal terms, is how far it is deviating from the real exchange rate. Is it very different or is it near the real exchange rate? Second issue is that of volatility. Volatility, of course, the RBI gets in and tries to control volatility because we need to give a stability thing. But on secular trend basis, if there is certain movements, then I think the RBI will go by their own declared system of floating rate management system, which is basically based on market rates.
The outflow of foreign portfolio has been happening for the last few months. Is that the reason why the government is not declaring ambitious disinvestment targets? Because under very difficult circumstances, you managed to list LIC, which was very successful. Then Air India, people had written off, lost their hope, but you managed to privatize Air India. Those were the difficult years in your tenure as the Secretary for Managing Public Assets. But recently we see that big bangs like that are not forthcoming. Is the market situation the reason for that?
Well, in case of disinvestment, we are not really saying, if you are really trying to link with the foreign flows into disinvestment, well, that may not be really the case. Because when foreign flows come in, the foreign funds they operate in the stock markets. Many of our companies, public sector enterprises, are fairly liquid in the sense that, for example, Indian Oil or Power Grid or NTPC, many of these companies, almost 49%, 48 to 49% is available in the secondary markets, and they play in the secondary market. So there is already stocks are available. So only thing is that their response is in relation to when they find that it will be safer to be back home rather than elsewhere, they will withdraw, and when there will be a change of situation, then they might come back. So this is a situation, this is a character of the FPI flows, which we cannot really grudge about, because I think that is how the capital works. They don't want to take further risks in such markets. But our growth rate is strong, our fundamentals are strong. So to that extent, we have a much greater chance of attracting foreign capital again, should the situation stabilize. Right now the market is building into uncertainties. Whenever uncertainty is there, market will react. And once the situation stabilizes, they will get that subsumed into their calculations, and then they will react differently. One thing is clear, that if the world is going for more protectionism and tariffs, that will certainly going to reduce world trade growth as well as growth and the world economic growth. So some of the concerns in the stock markets worldwide, as also the concerns regarding exchange rates, it also arises from the fact that the markets do not appreciate the tariff walls and free flow of trade and obstructions in free flow of trade, because the combined world growth might come down. India is not really immune from this pressure, and that is how even Finance Minister in her speech mentioned that we are facing headwinds. We are not having tailwinds. It's not a situation where world growth was very benign, world trade was booming. At that time, there were much greater opportunities of pushing growth. Now, for everything that we have to do, even to do 6.5%, we have to work very hard. If we want to push it harder, we have to work harder. And we must remove all impediments in the way we are operating in order to push growth. Growth will not come on its own. We'll have to work hard for it.
Yeah. Of course, there was also the economic survey pointing out to the need for deregulation, etc. And the finance minister also spoke about it. That deregulation has to come from not only the center but also the states. So how much are they on board, sir, on such issues? Do they also take initiative to attract more investments and get more economic growth for themselves? Do you see a kind of competition between states in this particular area?
There are many states where they are very cognizant of what they need to do in terms of ease of doing business. And when they do it, they would also attract more amount of capital. They will also, get the benefit of jobs and employment there. Because today, if you have to create sustainable jobs, you have to earn those jobs. And earning those jobs means attracting people to invest. Even encouraging your own people to invest. For example, if you have some enterprises, they are already there. They have to grow. In order for them to grow, we have to listen to them. We have to find out what is stopping them. And to some extent, we have to also look at our tax policy. We have to look at our policies of urban FAR, for example. Now, global capability centers and global value chains are very important player. If you look at southern states, if you look at Tamil Nadu, you can look at Karnataka, these states are doing very well in terms of attracting such thing, because when talent pool is there and they are also facilitating, then on this scale, Government of India is fully behind anything to do with not only the improving supply side or any supply side measure if you want to take. You improve logistics chain, you remove deregulations, you improve businesses, you facilitate investments. Government of India is solidly behind. And what we really want is, and we have taken a number of steps. For example, electronics manufacturing. It's a very important issue in southern states because a lot of electronics manufacturing is happening there. A lot of global players have come there. Apple has come there. They are setting up things. Then they have a lot of Tatas are there. You have component manufacturing there. You have also assembly plants there. Now components are also coming from abroad. In that case, we must also provide a good supply chain solutions to them, so that they are able to import those things easily and supply. In this budget, number of provisions we have made in order to facilitate it. For instance, we have done what is called presumptive taxation for the technical services. If the technical services come, if the people are coming from abroad and they are trying to help setting up the electronics manufacturing is there, so they wanted certainty of taxation. We have provided in this budget as a presumptive taxation for such people. Then secondly, they wanted something on storage, because they bring the components from different parts of the world. At the high seas, they have to provide, they have to keep those things in high seas, because they do not want to create, to get into problems on taxation side, whether they are permanent establishment or not. So what we have said is, okay, we will, for storage units, even if they are setting up warehouses from where these components are getting supplied, we will provide a tax certainty in the form of safe harbor. This we have announced. This will be a very major step. Both these things will be a major step for doing that. Even a third issue also we have sorted. So I'm just giving you an example how center and state can work together in order to create opportunities, improve business environment. And although we have got headwinds, within that we have to work together to do that. And this kind of center-state partnership is required every sector. Urban challenge, we have gun fund. We have to do a lot more in our cities. We have to look at our FAR issues. How are we giving, how are we utilizing our land, how facilitated we are. We have looked at the stamp duty regulations. We have to look at, our labor laws, other things. So in all those things, we must say we must facilitate job creation, quick decision making, promotion to invest, attract people to invest, attract people to save and invest. And we have, if you look at it, even the big middle class which support or relief that we have given is also intended that this money comes back to the economy with their own wisdom. They save, invest and consume, and it comes back to the economy.
Sir, you are also providing loans to state governments, long-term loans for investment purposes, etc. But there are various states which keep complaining about unfair share in tax revenues or delay in disbursal of the amounts due to them. Just for example, Tamil Nadu has been saying the Manrega dues have mounted to more than 1,000 crore, have not been dispersed, etc. So how do we sort out those issues, sir? Because every state keeps complaining, and then probably there is also a political reason behind it. But then there is a situation which has to be sorted out. How does one go about doing that?
Well, I am not aware really that such a thing is happening. I think if it is a particular ministerial issue, if it is some issue relating to a specific ministry, I think we have to check up with that ministry what that issue is. So I would not be able to comment on a general comment like this. But our framework is pretty clear. There are rules, there are certain guidelines within which the centrally sponsored schemes function. There is also a finance commission devolution formula. The money is released by that. In many cases, we also release the money in advance. Then there are finance commission grants. Those are also released as per the certain thing. Then there is a special loan of capital, 50-year loan. That is also contingent on some conditions. Some part is freely given and some part is conditional on certain reforms. But it is equally applicable to every state. So I don't really subscribe to that view that there is discrimination between the states so far as the government of India is concerned. If there is any specific ministry and any specific issue, I will encourage that should be sorted out with that ministry.
Another area of center-state relations is GST. Of course, the GST Council is the supreme body, but the very imposition of GST is being seen by many states as taking away their powers, and they say the remaining items, say for example petroleum products, should not go to GST basket. It should remain outside the GST basket. How do we encourage, how does the central government encourage, in what way can you nudge state governments to bring more items into say the GST basket like petroleum products?
First of all, I beg to differ with your statement that it is an imposition. Every state has signed off.
No, sir, I am not saying. They think that it is.
No, but they cannot think. You see, we cannot really have an opportunistic kind of thing. That you sit in the GST Council and say something, and then you come out of GST Council and say something else. GST Council is a very beautiful institution which has been designed, where all the states together come. See, in India, we are talking of world trade. In India, when we are trading with each other, can we have unnecessary frictions? No. And this is a beautiful thing which has designed such a system where there is no friction between Tamil Nadu or Bengal and Gujarat and Uttar Pradesh. There are hundreds of permutations, combinations possible. How the goods move, where the value is created, how much of the intermediary good is created where. And it is moving seamlessly. Isn't it incredible of our federation that we have devised together and done it through a consensus approach? How many times in the GST Council there has been voting? It is always by consensus. People thrash out. There is an officers committee. There is also a committee. Then the entire finance minister who chairs the thing, everyone is heard. Every view is taken. Then there are a group of ministers. In the group of ministers, all different states, north, south, east, west, they sit together in different groups. They bring their reports. So I think it is very important that we should not unnecessarily start blaming something. Now, if we have petroleum and others have been kept out, they have been kept out by conscious decisions of the GST Council. Although the law provides that they can be brought in if GST Council agrees. So far there has been no common agreement between petrol, diesel and ATF to be brought into that. So there will be somebody, now some bodies will say at least you bring ATF, aviation turbine fuel, but then there is still not consensus even on that. But we must move forward. I would say that in the large area where the GST, where the goods have been brought in, there also there is a scope of rationalization exists. And there is a group of ministers which has been created to do rate rationalization, because GST we have had certain years of experience. Now we have a much better idea. And where on earth such a kind of a beautiful system has been devised, where everything is paperless and every data is there and you are filing everything in such a short time. It's one of the very unique thing, and I think we should be proud of it. If we disparage institutions, then we do it at our own peril. Building an institution is a tall order. This is a very big institution. Now if we have some concerns, people bring it to the table. If we have something which is there, so we have to then now manage revenue concerns, because everyone wants revenue and all that certain thing, as also the expectation of the people sometimes that no, look, we are charging too much on some items. Now obviously there are people in somewhere they will say we are denied ITC, we should be denied ITC. Hotels will say that. There will be representations. These representations have to be taken seriously. They have to be examined. They will have to be deliberated. Certain decisions are taken, and GST Council constantly does it. And they always do it with consensus. People agree and sign off. So I would say that I would like to request the viewers to understand that it is a consensus-based institution. Things are deliberated. People do it, and in the best interest of everyone, we come to an agreement and decide. There is always a scope for improvement, particularly on rate rationalization, or there could be, some people say, why there are so many rates, can we have less number of rates? If we say less number of rates, then we have to see where rates will be increased. Will you agree to certain rates to be increased? Because if you have to collapse the rates into a particular slab, lower slab will always say, I don't want to go to the higher slab. Higher slab would be willing to come to the lower slab, but lower slab will not. So this is something which needs to be thrashed out through a lot of information and discussion and deliberation, and also involving people for a wider debate as well. There is not to say that, but we should not say that GST there is an imposition.
Fine, sir. Sir, with your wide experience, Planning Commission, Cabinet Secretariat, Department of Commerce, state government, even United Nations, all that. So have you ever seen a situation like this, when a new American president is elected, and there is a lot of rhetoric about taxation, and that is not just rhetoric now, already the first set has come out against China and Canada. So will this provide some opportunities for India, or is it also a threat to India?
Well, I would not like to comment on this sensitive issue, except to say that we evaluate, we watch, we observe, and we will, take the best interests of our nation in mind while taking any actions or policy actions. And as I said that earlier in channels also, people have been almost provoking, in the sense, what have you done? There has been, and FM has very clearly yesterday mentioned, there has been no statement, there is no statement for US administration so far as India is concerned.
So we will see to it
why we are jumping, why we are prejudging the issue, why we are creating a panic.
So that is not a warranted situation.
I would like to say, if you see the factual situation, most of the US imports to India, because if you take first 30 top exports and all that, our tariffs on industrial goods is as low as less than 10. Somewhere it is 0, somewhere it is 2.5, somewhere it is 7.5. Contrary to what you now see, we in the industrial goods, we examined 8,400 lines, tariff lines, one by one in our comprehensive review. And we have found that our 6,600 lines approximately are below 10%. It's 10, 5, like ASEAN. Now we have done further rationalization in this exercise, which FM announced in July. So our average rate of on industrial goods come to 10.8. It's gone further, 10.6. It has come down further. So therefore, contrary to whatever you might say, we are not high tariff imposing country at all.
So therefore, there is no need for us to worry as of now. Sir, that brings me to the final question.
which is about gold. The price of gold has been going up and in India, you know very well that gold is something people have some emotional attachment to buy for every function, every birthday or every wedding, etc. So what is the situation, sir? Even the sovereign gold bond scheme does not exist anymore. I mean, no new issues are coming. So how do you look at this unprecedented increase in price of gold? Will it also probably push our import bill further higher?
Well, I don't say that, you know, there's an unprecedented rise in price of gold. I mean, the gold prices, they keep varying. Again, like an asset class, it depends, you know, when certain kind of events happen, then people like to park their funds in different safe asset classes. Some people might say, well, gold is a safe asset, and some people, so to that extent the demand goes up and the people start, you know, putting their gold in that. So, but so far as the duty is concerned, the duty was brought down on gold.
Yeah, last year.
Yes, so last year substantially. Substantially, it was from 15 to 6.4. So therefore, I mean, the point is that, you know, government keeps a watch on the situation, and there is nothing to panic. There is a certain situations emerging. We are watchful, we are evaluating, and we will take keeping the best interests of the country in mind. We will roll out measures and others in whatever, you know, in our hand, whatever actions are possible. So therefore, and it depends upon different kinds of action. Is a monetary action is taken by RBI, fiscal policy, which we have done. I can say only in the budget we have done a deep balancing exercise. While we have retained, it's a pro-growth budget. It's a budget for you know, promoting investments, supply side, agriculture, MSME, exports, and investment. 4 engines, and reform as a fuel. And we are been kind and compassionate to the taxpayers.
That's a very nice note to end this interview. That's the 360-degree view from Finance Secretary Mr. Tuhin Kanta Pandey about the impact of the budget and the economy overall.